Yo,
Yo,
what's up, Brody?
just living, you know?
Yeah,
What's up with you?
not much, man. Just getting back from kicking it with the fam.
Yeah.
Yeah. Yep. I was excited I got made it back and stuff, so I had to go check in. Mm-hmm. Yeah, man. I see you was slapping some stuff, man.
Just try it, you know?
Yeah, man. Looking good. Let's go over that those setups.
I was on the monthly. On the monthly, and I see that respect to this zone up here.
Mm-hmm.
I see that it touched here previously. Here for support.
Yep.
So I was like, well, sure, when it touches here, I'll probably be able to get it for a buy.
Right.
So what I did was went down to 4 hour. Seen that it bounced off right off of the trend line.
Mm-hmm.
So I was like, okay, let's see how it closes. Waited for it to close. I was like, well, that's a bullshit up. It's time to drop down. Then when it was in the green, I was like, I don't want to take the trade. It's in the green zone because a lot of times when it's in the green zone, it just plays around before it
Right.
even makes a move. So when it broke up, it came with this retest right here. I was in it like right here.
That's perfect. What about that candle made you get in right there?
When I dropped down to like the 5 minute, I see that's making constant higher highs, higher lows.
Okay. Cool.
And it also broke the previous resistance.
Okay. So what else? What could you tell me about your moving averages in that area that would help gauge your bias?
Oh, and the blue cross above.
So the thing that would have helped you in that case is just understanding that price stayed above that blue MA while you was looking to execute. So as long as price stayed above that blue moving average, especially on your as you get on your entry time frames, being like M15, M30, and 5,
Yeah.
and you as long as you see that flow of those moving averages pointing upward and things like that, then it's like it's flowing along with your bias. So that will also give you an extra like confidence or extra edge.
Good. And then when it hit resistance again, I was like, oh what? I just remember everything they say in that yo, when it hits there, I'm locking up. And I threw 2 more lots. I threw 2 standard orders for a sell.
Mm-hmm.
I took it right here, it got up.
Yep. Now my boy trading. Yes, sir. What I like to hear, man. Catching it both ways. That's how you do it. Catch it from your zones, and you not chasing the market. You letting it play out towards your technicals, and you just playing, flowing with it based off how it reacts to your technicals. So right, that's how you do it, man. Because at that point, you actually communicating with the market. You see what I'm saying?
Yeah.
You're able to understand it. You're able to read it. And all you got to do is just understand how much you're willing to risk that trade, and then just let it do what it's gonna do. But that's 2 good setups, man. What you looking at this week? What's your analysis going for this week?
Just stay with GU. I'm looking for. I was saying that maybe it's gonna go bearish because of the monthly. It's at resistance, but it all depends on what day it really wants to. The market wants to push down, right?
Right. Okay. Yep.
So today I jumped in 2 trades, but then what you call it? I was a drawdown all day.
Yeah. How did that make you feel? Like what was your emotions like while you was in drawdown? Like what was you talking to yourself about?
I was all good.
It was good?
Yeah, I was all good.
That's good, man. Yep.
I was just wondering, like at first I was just like, man, I'm in drawdown. I don't know, it's weird.
Yeah.
It looked like it was about to drop.
Yeah.
Because that monthly resistance, so I'm just like, how come market's not moving? And I look, I got this app called, I can't remember what's FX hours. Because when I'm at work, sometimes I can be at work at any time. Sometimes I just want to know the sessions, you know what I mean?
Mm-hmm.
And when I looked at that, it said that London's on a bank holiday. So I'm like, okay.
Oh, it made sense.
Yeah.
Yeah. Yeah, that make hella sense then. Oh, that's smooth. You ready to get into these fibs?
Hell yeah.
Man. All right. Let's see. Let me change the color of these joints so you can actually see them. I don't know why my shit orange. There we go. All right, so the basis with fibs. Matter of fact, let me just pull them over here so you can really see what's going on. All right. So uptrend. Oh, that's ugly. Get one of these. So, all right, bet. So we're gonna go over fibs. You ready? All right. So when I pull my fibs out, especially on an uptrend, you always have to start from on an uptrend. You always start from a higher low to a higher high, right? You know that because the thing that we're trying to measure with the uptrend is the retracement, right? So if we're in a bullish bias because we're in the uptrend, we want to measure how much sellers are coming into that market before we find a place of support for the buyers to begin transitioning right back into that market, right? That's where we find our high low points, which is ultimately our entry base points. So it's always a point A and a point B, like I said, from a low to the high point, right? Till you see that transition. So you will see a tested candle, a bullish candle, and a bearish candle that lets you know it's a test of resistance. And you will see some type of break of support that lets you know that the market is ready to start counter trending. So with these mean on the side, these are the retracement levels, right, that I use. So from 0 to 23.6 all the way to really 120, right? So 110 and 120 is usually stop loss areas. Negative 27% and negative 61.8 is TP areas. Okay. So you always go from 100% to 0, and then it starts counting upward because, like I said, we want to see how much momentum comes back into that market. So if it comes to 23.6, a lot of times we're expecting some type of, so if the market came here, we're expecting some type of consolidation and continuation to negative 27, right? That's what we can expect based off of that fib level. And it's not so much a higher low point as it is a support point. Like sometimes you'll see the market make support there, but it actually won't be that higher low point, right? And when you get 23.6s in this area, like how I just drew, hold on, I'll take it back. Yeah. So like how I just drew, how it'll consolidate for a little bit and then shoot up. So what you would do is you'll have your point A, right? And then you'll have your point B, right? But 23.6, like I said, isn't considered a higher low point. The first higher low point is actually a 38.2 retracement level because it brings enough sellers into the market, things like that, right? And so what you do when it's a 23.6, a lot of times, like I said, it'll consolidate and continue to make some type of higher high in a sense, structure wise. But then it'll usually pull back to give you that 38.2. So what you do is you pretty much modify it. I'm looking for arrow. Yeah, arrow. So then what you would do, you would modify it, boom, to this point B right here. So then you would drag your fib up to your new point B, which would be right here. All right, so it would be up here, boom. And a lot of times this retracement, I drew it wrong, but a lot of times it'll come and actually make that 38.2. And I know you've probably seen examples of this, like the market will come up, boom, consolidate, it'll look like it's about to break out to that negative 27. It'll actually create that higher high, and then boom, hit that 38.2 to give you that real higher low point. So this will actually be your point C right here. Right. And once you see that the market made that level of support and it gave you some type of transition where it broke a level of resistance on maybe your M30 time frame and then made a high and then came down, make a higher low point to let you know that that uptrend is going to continue both on the lower time frame and the higher time frame. On the higher time frame, you would just see bullish candles, right? But on the lower time frame, you're actually going to see those higher highs and higher lows. So that 38.2% now, our first official higher low point in the Fibonacci retracements, you would expect an aggressive push, exactly what it looks like. You would expect an aggressive push to negative 27%, right? Because there's only 38.2% of sellers in that market. So the buyers can come back into that market fairly easy, right? So because it's still damn near 62% of buyers still in that market, right? So then we it pulled back, let's say 50%. That 50% is neutral, right? So that's not somewhere like we really look for like entries. I mean, I've taken entries off the 50% before once it showed me that it was ready to push, but that's not somewhere, you know, the market has stopped there sometimes, but a lot of times if the market breaks 38.2, it'll go to that next PRZ, which is at 61.8, right? And based off that 61.8, that's where a lot of people like to call like their golden zone and stuff like that. And that's usually because the market, it'll give you that moderate retracement, like that smooth retracement back to that negative 27%. Okay. 78.6. So the deeper that it gets in the retracements, the slower it's going or the longer it's going to take for that main bias to shift back into that market. So that's when you'll start to see like shit like this, like a trend within the trend. Because if we based our fib off of this point A, boom, to point B, you see it came to 88.6, right? So if we spreaded this market out, shit. So if we spreaded this market out, spread it out some so we can see the whole trend. We got point A. Point A is at our 100%, so right here. Point B, right here. And then our point C is right here, right? So pretty close to each other. So it's a steep retracement. So like I said, that's where you can see like trend within the trend. So you'll see buyers and both sellers coming back into the market, but the main moves is going to be what? Those buys. And a lot of times you see this diagonal trend line right here. You should also use that sometimes as a dynamic form of support or resistance, depending on if you're on an uptrend or if you're in a downtrend. You know what I mean? So how it lines up like that is cool too. But like I said, 78.6, you're expecting a slow retracement to negative 27. 88.6, you're going to see a lot of stuff like this. It's going to be very slow to get back to that negative 27 because it's going to take a lot of buyers to get back into the market. And then 100%, that's a full retracement. So did I draw an example of that? So yeah, before I did the break instruction. So the 100% retracement is boom, boom, right? So, oh my God, I keep doing that shit. Boom, boom. So 100% retracement, that's a full retest, right? So the market pushed up and then counter trended, full retest. So this is the furthest that the market can go while still maintaining the uptrend bias, right? So then boom, once that 100% is broken, right here, right? Once that 100% is broken, where's the color thing at? Change the color of that shit. Make it blue for right now. So boom, once it breaks right here, it gives you that bearish, breaks that support. Boom, we know we're looking for that lower low. Boom, come back, give us that lower high point. This is gonna be our entry base point because now it is point A. Boom, so we gotta take this fib off because it broke structure. Point B is gonna be down here. So then we'll put our fib out. Boom. Boom. And then the little indication, just technical analysis wise, the little indication that this market would have been trying to break is the fact that it didn't go to make a higher high. So once you've seen that the market came up, it was trending up, making consistent higher lows right here. You'd have been like, all right, I'm still in the bullish bias. Boom. And then once you see it break forms of support, but before it break the support, it made a lower high. This is in fact a higher high. Right? And then this is a lower high. That shit ugly as fuck. I can't write that shit. But yeah, lower high, boom, you get the picture. So then boom, that would have gave me indication like, damn, there's a lot of sellers coming into that market. You know what I'm saying? Because we're on a stupid uptrend bias. Even if we had like some type of trend line here, boom, point A. You know how we draw our trend lines. Point A, and then point B, and then into the future, right? So that also could have gave us some type of gauge, right? So once we started adding our technicals, we understand it's a lower high, so sellers could possibly be coming into this market. Boom. Then we're seeing a minor breaker support probably on our main time frame and possibly earlier on our entry time frame, such as M30. Then we start seeing a continuation after the break of our trend line as well. We probably seen like sexy candles, things like that, and we continue to see that lower highs and lower low structure on M30. On H4, we continue to see bearish candles. So that's where we got our bias from. So then boom, it broke the 100%. We understand we're out of all buys. We're not looking for any buys anymore. Now we got to be patient, wait for the market to make a lower low, come back, make another lower high. So this would be our point C at this point. Boom, point C. We understand that it's at that 50%. So it's at a neutral spot right now. So right now, we would have to see some type of support broken on our M30, M15 to let us then, or we could see like some exhaustion in this area on H4, like some wicks, things like that. We also see that it's a support zone right here. Now it's trying to seem like some resistance. So then we could also use some type of exhaustion zone right here that lines up with our 50, right? And if it gave us like some wicks and stuff, then we could go to our M30 time frame, see if we're seeing any type of bearish variations, bearish engulfings, you know what I mean, exhaustion on that time frame as well, lower high points on that time frame as well. And then we would be actually looking to execute on off our M30, looking for that negative 27 touch. That makes sense?
Yeah.
You got any questions when it comes to fibs?
No.
Okay. But yeah, so that's the main thing that we wanted to go over this time, this session. And I want to see, you know what I want to see, man. I want to see you doing your thing this week. I want to see you implement everything we've been using. So we started off with structure. Then we went into candlestick analysis some. Then we went into moving averages. We went into tested versus broken candles. You know, we went into trend lines, how to properly use trend lines. Then we went into how to properly use counter trend lines. Then now we in fibs. So the next thing is going to be going over like certain major market patterns and stuff like that. Like, so understanding that, you know, when you're looking at certain time for not certain time frames, but certain environments in the market, what to look for. So if I'm in a downtrend, then I know a double top is only going to be valid in a downtrend in market. You know what I'm saying? If I see a double top trend, then I know it's not valid. I'm not really looking for sales. You know what I'm saying? So it's like those major market patterns will present themselves, you know, in different ways and stuff like that. But you got to understand when, like I always tell you, got to understand when is the market more probabilistic and in your favor, which is your edge, right? So yeah, that's what's next is just studying, keep studying your candlestick analysis, your patterns, and then studying those major market patterns, because that's what we're gonna go over next. But I do want you to find two setups where you're using your fibs and your moving averages, both combined. So you gotta be able to use your fibs and your moving averages. So even, and in this case, like for instance, if we was trying to get in here at this point C, like your moving averages could have looked something like, for instance, they would have probably been the blue one. Let me see if it's this kind of trend. It would have been probably going up here. Boom, boom, stand above. Boom, boom. Shit probably would have got tight up in here. And then boom. And then shit probably would have been keep going something like that. The black one. I changed the color of that shit. I think so. Yeah, right here. So the black one would have been like, and then shit would have got tight up in here, tight, consolidated, and then you would have seen that shit go something like that. See what I mean? So then you could have talked about like, all right, bet it gave me that lower high point, which was my point A. Then I seen my moving averages cross right here. So I know that let me know that it's more sellers momentum coming into the market on this time frame. So then boom, once I saw that level of support broke, I already knew what I was looking for. I wasn't looking for sales up until the market was going to make my point C. So I needed to wait and be patient for it to break a level of support. I needed to see a continuation on the lower time frame. I needed to see bearish candles on my higher time frame. I needed it to make support, make a former level of support, and then come back and make a lower high point while maintaining within that 100% of the retrace, right? So that's that workflow that you gotta go through when it's like, all right, bet, how can I add all of this up? And then you start adding other shit like I said, that exhaustion zone is gonna speak volume to you. Like you real good with the exhaustion zones. You've been playing good off of those. Then what you do is you look for wick areas in your exhaustion zones, you know, around that PRZ level, you know, around that 50% level. You know what I'm saying? But that's how I use fibs. And my negative 27 and my negative 61.8 is my TPs. If I'm in this order, so for instance, like we got into this order right here. Let's say we got into this order, boom. Let's say stop loss was somewhere above this exhaustion zone, boom. Then you can't see that shit. 4. Four, dark blue, and then all right, so order in, stop loss. Then like if I was trying to measure, you know what I'm saying, my pushes now, then it's the same kind of shit. Same kind of shit, bro. If I'm in that order, boom. Point A, the market may support. All right, point B. If it don't break that 23.6, that 38 point, really that 38.2 with me. If it don't break that 38.2, it used to be 23.6, like when I would be scared and like letting the market retrace against me. But now it's 38.2 because I understand that sometimes you got to give back to get more. All right. So as long as the market doesn't break that 38.2 for me, meaning I'm not giving back more than 70% of my profits, then I'm fine with that. I'm cool with that. And then if it hits that 38.2, then I'm out of that order because I'm not letting once I go in profit, I'm not letting the order, you know what I'm saying, come back like that. Like, nah. I'm protecting my capital, protecting my investments, and also protecting my ROI. So it's like that's how I do it. And statistically, just like that. And I be in and out of trades, bro. Like that's just flowing with the market. The same way you was just flowing last week. That's how it should be all the time. Like, you know what I mean? Like you're not chasing it, it's just coming to you. You reading the market, you communicating with the market or other traders, you know what I'm saying, just by waiting on your edge and putting the probabilities more in your favor. You know what I'm saying, that way. Yep. And if you're doing that over and over and over, then you understand, you know, it's more of a long-term game, of course, and you know that it'll shift in your favor as your sample size grows, because each good trade that you put on, your sample size for your trades grow, which means your chances of winning is growing as well. You know what I'm saying? So, yes,
I got that book, but I didn't start reading it.
Which book you read?
Yeah, I didn't start to read it yet.
Oh yeah, that boy got that book. That's that book right there, man.
Start reading it soon.
That's what I'm talking about, man.
Trying to get to that full time.
Yeah, man. Yeah, man. What? Anything else going on right now? Anything else you need touched up or anything?
Straight.
Straight, gang. You straight, I'm straight. Then just keep killing it, bro. Keep that momentum. You know what I'm saying? Don't let remember about the equity. You know what I'm saying? Once you go in equity, you don't want to go back to your initial investment, right? So we don't want to lose more than we made our last trade, basically. You know what I'm saying? So we want to keep that mindset, keep our risk management tight, because a lot of times when we get on that win streak, you know, everything got to stay in line. You know what I mean? So keep the same amount of fluctuations that you've been seeing good. Keep your stop losses in good areas. You know what I'm saying? And just keep trading the way you've been trading, bro. I love the progress that I'm seeing. Loving it, man. So just keep doing you, and then we'll tap back in. What's that? Monday. We'll tap back in Wednesday.
Cool.
All right. That work for you? Wednesday work for you?
Yeah, man.
Okay, we'll get the time.
I work every day, so
Yeah, we'll get the time and stuff down. Yeah, we good. So you already know that for sure. But keep killing it, bro. Let me know something.
all right, man.
All right, buddy.
Peace.
Peace.